Welcome back. In this lesson, we're going to talk to you about best practices when you are working with a buyer that is getting a loan, a mortgage loan to purchase a house. We're going to talk to you about a couple tips that you may want to look out for before you jump in your car and start showing homes. So, if you're at this stage, you have already had your buyer questionnaire, you've filled out your sheet, you've called your buyer and they've answered all the questions that you needed to know in order to assist them with finding their home. Now, this phase is also very important because at the end of the day, they will get approved or may not, but you're talking to a buyer that is approved for a mortgage. Let's just say you have a buyer and the lender gave you a letter that says they were approved for 800,000. That really doesn't mean anything. And I'm going to explain why. What does that 800,000 mean? That 800,000 works out to be their mortgage payment, which is their PITI, their principal, their taxes, the interest, and the insurance. So it's really a great common practice to, when you're looking at properties for your buyer, to keep in mind the taxes on the property. If you're looking at properties and you see a house that has very high taxes, you may want to let the buyer know that that property's taxes is very high. There are several reasons why property taxes are high. I'll give you just a few. The first reason could be that that property does not have a homestead exemption, where that property has maybe a tenant living there, or the homeowner has not applied, or the homeowner just doesn't live in the house. So there's no discount on the taxes. A second reason could be where the homeowner has taken out what's called a PACE initiative. This is a financed project. Generally, it's for energy efficient things such as a new roof or impact windows. And if they've gone through a program called PACE, it will show up on their taxes. So keep in mind of the taxes that you will see. Another thing you want to look out for are the HOA, how much it is the HOA per month or quarterly. If you have a buyer that's very, very payment conscious, meaning they have to keep their mortgage payment under a certain amount, you may want to work very closely with the lender. I always recommend, as soon as you get that buyer, call the lender, introduce yourself, let them know that you're going to be representing that buyer. After you finish talking to that lender, you want to get those basic numbers that they're using to determine that they're qualified for 800,000. And you want to ask them that PITI, what are they calculating for the taxes, insurance, and as well as the home HOA, the HOA dues, which is the maintenance dues. You need to know those numbers, because if you see something that's a little high, then it's a possibility that your buyer may not be approved. So look out for those signs. When you do find a property for your buyer, make sure you go to the next step, which is determining the value of that property. You're going to learn that in the next lesson, and how to submit a sound and realistic offer that's going to get accepted. Thank you for watching, and we'll see you on the next lesson.